The Australian dollar rose above 76 cents this week for the first time since November, but mostly it was quite range-bound around 75.5 cents. The local data highlight was fourth quarter CPI. Australia's inflation rate rose 1.5% over the year. That was a little bit softer than we had expected. While petrol prices rose steeply as expected, overall there was a fairly soft tone to department store and supermarket prices. It seems that ongoing aggressive price discounting amongst retailers is weighing on inflation in an environment where wages growth is extremely low. The Australian dollar fell more than 0.5 cent in response to the inflation numbers, as markets wondered whether the Reserve Bank might, after all, cut interest rates again. However, the Aussie was able to keep above 75 cents as market pricing for the RBA remained fairly cautious, with only about a 10 to 15% chance of a rate cut priced in by May. The Aussie dollar may be range-bound against the US dollar, but it fell to a 2-week low against the British pound this week, below 60 pence. UK fourth quarter GDP rose 0.6%, a little bit stronger than expected, and overall the pound is still showing signs of recovery after pricing in the worst-case scenarios for Brexit. This week we saw the UK Supreme Court decision on whether the government had to consult Parliament. It went against the government as the court ruled that the government would have to consult Parliament before triggering the formal Brexit process. However, the government seemed quite prepared for this and has legislation ready to go, so the pound was able to continue its recovery. Australia's data calendar is reasonably busy in the week ahead, featuring December readings on business confidence, building approvals, and the trade position. Business confidence is probably going to have risen slightly. Building approvals continue to decline, having reached very strong levels over the past couple of years. But perhaps most interesting for currency markets will be Australia's trade position in December. November was a return to a surplus, and we expect another surplus in December of $1.5 billion. That would be the strongest reading since February 2014, largely being supported by the strength of commodity prices, in particular coal. FX turnover in the week ahead will be substantially thinner due to holidays across Asia to observe the Lunar New Year. In the US, the focus will be on the Federal Reserve policy meeting. Fed officials continue to talk about the prospect of raising rates multiple times this year, though they're very unlikely to do so at this meeting. In the statement, we expect the tone to be somewhat more upbeat, reinforcing that hawkish message. That's likely to support the US dollar and help push the Aussie down towards about 74.50 to 75 cent range. That's despite ongoing support from commodity prices. We'll speak to you next week.